The Nifty is down about 72 odd points.
Nifty is currently up 70 points from the day's low. It's just marginally in the red, down close to about 14 points.
Nifty 50 continues to be on the flat line, 17,500 levels.
We've got a huge market move going on, all of 5 points. So, I mean, you know, it's a pretty tepid day. Interesting kind of day, but very good day all in all. I don't think broader markets picked up that much. Advanced decline is still 1:1, but Nifty picked up beautifully.
Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action and 5 headlines. I'm Reema Tendulkar and these are the headlines for the day. Markets recover in last hour to end in the green. The Sensex rises nearly 100 points. The Nifty gains over 50, but bank stocks decline. Rupee hits a new low as the dollar strength continues to rattle currencies across the world, but the RBI steps in to stem the decline, sparking a late recovery. The Japanese yen weakens against the dollar to levels not seen in more than 3 decades. Innocent Bank slips despite strong growth run and rising margins. AU Small Finance Bank slides despite a strong quarter on growth concerns. Canara Bank gains on the back of a good second quarter. Asian Paints misses estimates in the second quarter. Margins decline sequentially and volume growth is below expectation. The management says demand was subdued due to extended monsoons. Some relief for Vodafone Idea. Reuters say the market regulator has approved the government's proposal to convert its pending dues into equity. The government's stake could rise to 33%. And here's a lineup of what we have for you in store today. It's a power-packed show. In Market Opinion, Sridhar Shivaram, Investment Director at Enam Holdings. And in Big Corporate Voices, Anil Rai Gupta, CMD Havells India, Jonathan Hunt, MD, CEO, Syngene International. The first up, markets, a rally in rupee rubbed off on the equities in a late rebound, which helped the Sensex and the Nifty end in the green. The Sensex gained 100 points, the Nifty climbed over 50 points, but the banking stocks were under pressure along with the mid-caps. The mid-caps staged a recovery towards the end of trade, but still ended in the red. Prashant is here with the market highlights.
Well, the market made a very strong comeback, and bulk of that move came in the latter half of the day. You know, yesterday we were talking about how the rupee weakness induced weakness in the Nifty as well. And I think a little bit of reversal happened there. The rupee was very strong, 40 paisa recovery from the day's low, and the market came back pretty strongly as well. PSU banks continue their run. That index has done phenomenally well over the last 4 sessions, even as the private bank space continues to slump. Bank Nifty, as a result, because private banks have a larger weight, was lower. The other space which did well was IT services, and you'll see that in stocks. So in Nifty, names like Tech Mahindra, HCL Tech did very well. The Adani Group stocks in the Nifty, that is Adani Transmission, Adani Enterprises, beg your pardon, Adani Ports, they were higher. And then you had names like UPL and NTPC, which participated as well. Losses in IndusInd Bank, which was a bit of a surprise because numbers were good. Asian Paints was lower, and you had Apollo Hospitals, which lost as well. Broader markets, almost 1:1 in terms of advances to declines. Names like Canara Bank, Mazgaon Dock is back again on the winning streak. A lot of them, of course, reacting to earnings. Deepak Fertilizer, PNB Housing, Birla Soft, Rallis India, and a bunch more. The recent listing from last week, lost finally. It's been on a non-stop tear upwards. That is Electronics Mart. That was down about 7%. AU Bank was under pressure. Container Corporation reversed some of the gains from earlier this week. Delivery was a big loser, with big volumes as well. Policy Bazaar, another one of those recent listings, and Schaeffler, which is a well-owned auto-anch name, which came under pressure as well. I think it's back to watching global markets because that is where a bulk of this volatility today and, in the second half yesterday came from. Yields in the US need to cool off a little bit, and I think that will provide a little bit of calming effect to global markets as well. Back to you.
Thank you very much for that. Let's also get you some expert opinion on the markets. Christy Fong, Senior Investment Director at Asian Equities at Aberdeen, said India remains an attractive market. It has good long-term prospects. She also discussed her top bets for the Indian equity markets. Listen in.
India has always been an attractive market for us. We are long-term quality investors, and because of that, there are a lot of companies listed in India that tick many boxes for us. So attractive market, very good long-term prospects. Obviously not without its challenges in the past, but we've seen how companies have been tested through cycles, showing resilience. great management team. So yeah, very positive on India at the moment. India's amongst our preferred markets. Within that, we've always liked the domestic consumption story. That has not changed. We continue to like the private sector banks. Banks, has been through a difficult cycle, especially in the last 2-3 years. And you are seeing that starting to turn around. So we are constructive on banks, especially the private sector financials. Consumer names is another one that we favor, and that comes in different forms. So, it comes through in not just staples, discretionaries, but, communication services. So that's the underlying driver that we like and we see attractive in India.
Let's get to the second headline then. The Indian rupee went on a roller coaster ride today. The currency opened at a new low against the dollar, then fell rapidly in early trade. But sources say RBI intervention in late trade sparked a dramatic recovery. In fact, the rupee's recovery today was the biggest in the last 1 year. But as things stand, $1 costs just under 83 rupees. But the rupee is not alone. The strength in the US dollar is rattling currencies across the world. The Japanese yen has fallen to a 3-decade low. The Korean won, the Malaysian ringgit, and almost all the major currencies in Asia are struggling against the greenback. Lata is here with the money market action.
Well, actually, it's a huge U-turn that we have seen. Where did we start at? 83, almost 83.01, fell as much as 83.30 thereabouts, 83.28 to be precise, and another 50 paise move on the other side to 82.80. Now, global backdrop hasn't changed much. It is still against emerging market currencies, and other Asian currencies are still weak. And US yields are still high, dollar is still high. What clearly is changing is the flow. Yesterday, we spoke about this one foreign bank which seemed to have had a large buy order for dollars. Now, once that ebbs, then that also takes away a bit of the pressure on the dollar. In addition, banks which knew of this order and expected RBI to come in had also taken positions, at 82.30, 82.50. All of them got hurt and nobody wanted to risk it now. The crux of the matter is it's a very illiquid market. And so even one bank or two bank buy orders can swing the market both ways. And, the Reserve Bank was there unexpectedly. The Reserve Bank has this ability to perhaps catch the market napping. Yesterday, a big order came in. They didn't want to stay in the way. They ensured that the buyer bought the dollar expensive. And today, when the wind was somewhat on their side with not too many buy orders, they just came in and rammed it down, or so it looks, offered a considerable amount at 83.20 and took the dollar below the 83 mark. It's an illiquid market. So, the Reserve Bank picks and chooses the days that it wants to intervene with minimal expense of reserves to maximum impact.
Thank you very much, Lata, for that. Let's get to the third headline for the day, and it's all about banks. IndusInd Bank, AU Small Finance Bank, fell between 4 to 6% despite beating estimates in the second quarter. While Canara Bank gained on the back of a better-than-expected Q2, the stock ending higher by 4%. Abhishek joins us with the key highlights of the earnings.
Well, for IndusInd Bank, it has been a record quarter for many parameters. Like for 8 quarters in a row, they are seeing operating profit growth both YOY and quarter-on-quarter. Net interest margin is at 9-quarter high. The return ratios are perhaps the best in last 11 quarters. Loan growth is the best in 11 quarters in terms of YOY momentum. Slippages, they have remained under control and one of the lowest in last 8 quarters in terms of slippage ratio. And asset quality, that is gross NPA ratio, is the lowest in last 14 quarters, coming in at 2.11%. So both in terms of NII and PAT, they have beaten our poll. In the analyst conference or the analyst feedback is that, there is a concern with respect to further duration of the MD as the board has given for 3 years, and it is more likely to be lesser than that. So coming on to AU Small Finance Bank, the net interest margin has expanded by 30 basis points on a sequential basis, aided by the fact that yields have improved, and CASA ratio has also jumped, which has aided the cost of funds being under control. So AUM growth was that's around 38% YOY and about 4.5% sequentially. Slippages have remained under control and asset quality largely stable over there. Restructured book has declined massively to 1.7% versus 2.1% in the previous quarter. So both in terms of NI and PAT, it's a beat on our poll. However, the feedback is that, in the con call, the management has guided for loan growth to be in the region of 26 to 27% versus 38% that they have recorded right now. Canara Bank has seen a strong quarter this time with records gathering over there. Gross NPA ratio or asset quality being the best in last 7 years. The loan growth is pretty strong. They have gained market share both YOY and quarter-on-quarter. Net interest margin is at 9-quarter high of about 2.83% and operating efficiency or the cost to income ratio is the lowest in last 22 quarters. However, on the flip side, the CASA ratio is the lowest in last 7 quarters and international book that continues to outpace the growth in the domestic business for last 6 quarters in a row. In terms of P&L momentum, both the NI and PAT is a beat to our poll. However, one point to note is that the tax rate has declined substantially to 22.7% when compared to 30.7% in the previous quarter.
Thank you very much for that. Need to get into a break. As we do that, we leave you with some more market opinion that we got today.
Our view for 22 broadly had been and has been it is also right now that 22 is a tough year. As it is looking, we may actually even the first half of 23 also may be slightly tough, not because of more of India reasons. More, I think the global challenges are still there. India is looking good within the overall, emerging markets and developed markets. But does that mean that, we can escape some of the global shocks if they come? So that's how we are positioned. We are cautious, but we know that things are looking good as we enter 23, possibly for India at least. But how it shapes up, only time will tell.
In a world dealing with multiple challenges, India remains an oasis of hope. We would bet on domestic cyclicals because we remain positive on India's growth prospects relative to the rest of the world.
PSU banks, so they can be a good, maybe not a very long-term investing, but as a trade, you buy it less than one book. Like most of the banks are about 0.7, 0.8 book, and except SBI. SBI is a little premium. So leader of the pack is SBI. So I think, so that's a very large, so you like financials and in that not so favored is the PSU banks. So like that, there are opportunities.
Best bank in India by far has been HDFC Bank, and it's done nothing for 3 years. And even now, it's like, oh, how will they grow? How will they get deposits? I mean, with a 5-6% share of a banking sector, where the economy is still going to triple over the next decade, where your share of financial savings is going to go up. If you're going to tell me that the largest player here doesn't know what to do and how to grow, it's a bit of a kind of no-brainer.